range low sweep set up, and I'm going to go over how I trade it and just a few different details, all of the rules and nuances, and just kind of go over how I trade ranges in general. So yeah, let's go ahead and hop into it. So general overview, Bitcoin typically moves from one consolidation range to the next with impulse moves in between. It's pretty much how Bitcoin moves most of the time. That's pretty much the ranging market. I mean, it's not very fluid or flowing kind of price action. It's typically just ranges, impulse moves in between. There are many opportunities to profit from the patterns that occur after the impulse move, in case you missed the big move. So instead of FOMOing in during the middle of a pump or dump, wait for a range to form after the impulse move and then try to take advantage of all of the patterns and setups that occur afterwards. So, FOMOing in or trying to be a breakout trader is not going to go very well, especially in Bitcoin and, in BitMEX especially. I mean, we just get tons and tons of fake outs, stop runs, wicks, false highs, false lows, all of that. And so trying to FOMO in at the beginning of a big pump or dump or whatever is typically not going to work out very well. So just wait for that pump, or just wait for that move to be over with. Wait for it to finish out. Let price slow down so you're not getting all emotional and watching, a $1,000 green candle. Maybe not $1,000, but you know what I mean. It's never a good idea just to FOMO into one of those. So wait for price to calm down, chill out, and then it'll form a range like it always does. And there are different patterns and different setups that you can take in these ranges. So there's really no point in FOMOing in a big move like that. So some setup details, the key steps. So you first set the range high, then set the range low. And you want to interact with the mid-range to confirm that the range is formed. So once price interacts with the mid-range, whether that be as resistance or break above it, retest it as support, just whatever, as long as it's interacting well with the mid-range, that is confirmation that you have the right high and low marked for the range to be set. So those three rules are pretty strict. You want to stay to those. Sometimes in the next slides I will go over this more, but you always want to have the range high set first. Even if it's a breakdown, you get an impulse move to the downside, you want to have the range high set first and then the range low in those orders. I don't like to have the range low set first and then the range high, and I'll get into this. But so stay strict to those three rules, the first three rules. And then the fourth and fifth rule kind of vary, or different variations of them. Typically this is how I trade it. I trade one way, which is the buy side, long side. So I'm waiting for that range low sweep so I can buy in. Sometimes these will be backwards, but whenever you get the range high sweep first before the low, I just use, you could short that because it pretty much always goes down to the range low, but I just use that as a sign that the range low sweep is going to come. I don't like trying to fit two different trades in that. I guess you could, but just me trading on low time frames and just trying to fit two different trades in that can be kind of stressful, and I don't want to miss out on my one move that I am confident in, instead of trying to chase two different things at the same time. So I just typically let the range high sweep if it goes first, and I just use that as a sign that the low is coming. Low sweep is coming. So even if even if you did sweep the range high first, you still want to go in that order afterwards. So after the range high, it'll sweep the range low, if these are backwards, and then even after it sweeps the range low, it usually just goes back for the high again. So if you do get that range high sweep first, just use it as a sign that it's coming for the low next, or just, I guess you could short it if you like to trade that way. But anyways, that's pretty much it for the essential steps of the range low sweep. So whenever you're marking the range, there's two different ways that you can go about it. There's continuation and there's reversal. So that's why I have both of these laid out on here. So if you're trading it as continuation, you will get a breakout or impulse move to the upside. And so you can use that swing high as the range high and wait for the low to be set. And typically this breakout will break a high and shift market structure. So if it shifts market structure, that is a pattern with bullish market structure. If you're trading on the long side, is going to be higher probability than if it doesn't shift market structure at all. So if you're trading as a reversal, you will get a breakdown or impulse and move to the downside. And this is kind of what I was talking about in the previous slide, but you're going to want to ignore the first low. So if you get a breakdown or impulse move to the downside for this reversal pattern, you want to wait for the range high to be set. So ignore the first low, wait for the range high to be set, and then mark the range low after that. So like I said, you want to have set the range high, then the range low. So whenever you have the reversal pattern and it's a breakdown, wait for the range low or range high to be set, and then the range low. Ignore the first low. I just wanted to repeat that quite a bit so you can get it in your head, because just after trading this for so long, this is kind of what I found just to work the best. Next key point, if price is tapping into high time frame demand or a key support level, this gives it higher probability of the setup playing out. So if you have a high time frame demand zone and price is breaking down, you'll ignore that first low, wait for the high to be set, and then mark the second low as the range low. And and then it'll go through the motions of interacting with the range or the mid-range, and then sweeping the low. And since you're at high time frame demand or a key support level, this is giving a lot higher probability of it playing out, because if you're at high time frame demand, that's a setup in itself, trading the first time back to a supply or demand zone. So if you have a high time frame demand zone, that's a setup in itself. And the second setup is a 5-minute range sweep inside that demand zone. That's like cash money right there. That setup, it works out so well. I just caught a long today on that exact setup. So that gives it a lot higher probability whenever you're at these key levels. Let me make sure I'm recording everything. Okay, just want to make sure that's all good. So for the entry, there are a few ways you can go about entering. So the first way is you can enter on the wick or the stop run if there is a high time frame level or demand zone under the low that should provide support. If there is no level or no demand zone, then you just want to avoid entering on the wick outside of the range. The only time I was trading this and I was working out was whenever Bitcoin was going parabolic. It would pump, consolidate a little bit, and go for the range low sweep, and I could just enter outside of the range low in the wick, get a nice ass entry, and it would work out. But right now market conditions are not like that, and it's not working out if you're trying to enter outside, below the range low. You want to wait. Well, the way I go about it is typically number 2. So you can wait for the candle close. If it closes as SIP, then you can enter and market. This will offer lower risk to reward, but ultimately can save you from jumping in too early. And depends on where you're targeting, but this is the best way to go about it. My opinion is number 2, because you get just higher, or more confirmation if it SFPs the low. Because if it breaks the range low, like say you go with number 1 and there really is no high time frame zone or level, and you're just entering below the range low, it could just close below the range low and then go lower. Just because it sets a range and it goes through the motions of these steps, 1 through 3, doesn't always mean it's just 100% going to work out. So if you do wait for the SFP at the low, that's confirmation. At least that's confirmation for me. There is other ways to go about it, but that's the way I like to do it, is number 2. You go to number 3. Typically price forms an under over pattern in between the low and the mid range after the low gets swept. This does offer you an entry further into the range, but works well if you miss the SFP. And you can use this to compound or get in if you weren't in already. If you miss the SFP or whatever, most of the time price does give you like that under over pattern If you don't know what that is, here's a quick example. I don't really have anything to mark it up, so sorry about that. But basically, say this is the range low, this line, price goes below it, SFPs close back above it, goes up a little bit, and then retest down here, either at like a support level or the range low or demand. Any of those options, price will sweep this and then usually retest down here a little bit. You can either compound down there, or you can enter if you're not already in, like I said. But it usually does play out pretty well like that. I mean, once you start studying these ranges, you'll see that they play out, pretty similar, majority of the time. Obviously not every time, and it has some of the same characteristics. It doesn't mean it's going to look like an exact fractal, but just different things that happen. And you'll notice that this under over pattern does play out pretty often. So stop loss placement, there's also a few different stop loss placement options. You can place your stop below a high time frame level. This is the key. If you do have a high time frame level, that should provide more, a stronger level than just say like a M5 level, because typically, like I said, I trade these on the M5 and the H1, so hourly chart and 5-minute chart. Most of the time it's on the 5-minute chart, but occasionally you do get it on, on the H1 as well. I don't really, I'm not really much of a swing trader. I don't really like holding trades for that long, so you might get this pattern on like the H4 or the daily or something like that, but I wouldn't necessarily trade it like that. I would just use that as a directional bias. If it's playing out, just say on the daily, then just use that and drop it down to lower time frames and trade in that direction. But typically on the 5-minute and the H1. So if you have that high time frame level below the range low, you can just place your stop below that. Or you can place your stop below a demand zone or a swing low to the left on a lower time frame. So if you have a low time frame demand zone, which I think I have one right here in this example, you have this demand formed, push price higher and set the range. So you could put your stop, like I have in this example, put your stop below the demand zone. And this typically works out if you have a significant demand zone or a swing low. Sometimes they get swept though, and it really depends, because if you have a range, the swing low might not be relevant, but you just kind of have to find what is in the area of price, different key levels that you can put your stop behind, because trading the M5, you really can get ranges all throughout the chart, so it's not always at a high time frame level. So you kind of just have to find what can work at the moment, and just place it behind that. Or you can do number 3, which is after the SFP. You can place your stop below the SFP's wick. If you're going to do this though, I would definitely give it room to, like a little bit of wiggle room, because you guys know Bitcoin, it just likes to throw you some crazy wicks. So just because it SFPs, you don't want to put your stop $1 below the SFP's wick and then it just wick down, take you out, and then just continue on with the range. So just give it some room if you're going to do it that way. And if you have a different stop loss strategy, then by all means throw that in here, throw that in there, and just do it your way. But these are just the ways that I have found that are able to work. So, like I have marked out, or like I have noted here, I would personally test these different options to see what works best for you, because like I said, you might have a strategy already that you use to place your stop losses, or you might start trading this for a little bit and find something that I didn't mention on here that works well. So if you do that, go ahead. Obviously, I don't know everything. I have been trading this setup for a while, but there's new things I find out about it, all the time. So if you find something better, just go for it. One thing I will say, once price SFPs a low and then establishes support of the above the mid-range, you can move your stop up to break even if you want. Some systems allow for this and some others don't. You might have already tried moving your stop to break even on different setups or different trades or whatever. If you have stats to back up whether or not you should be able to do that, then you can explore this option. I like to, if the range is big enough and offers a high RR trade, if I'm up like 2R on a trade, I like to move my stop up. And I'm not so strict on this rule for myself. So when you're scalping like this, you kind of have to be just on your toes and being able to adapt to different things, because on low time frame you're getting all different kinds of stuff. So like I said, just test out these different options I'm giving you, see what works best for you, and then really just trade how you want. But that's it for stop loss placements and targets. Here are a few options for taking profit. So take profit at the range high. I always want to lock in some profit at the range high, regardless of where I think price is going. Percentage amount is up to you, whether that be 50%, 80%, whatever. You always want to lock in some profit at the range high. Just because you don't know what's going to go on after. You don't know where price is going to go, because it might give you signs of where it's going to go, but the range high is a resistance level. So not taking profit at a clear resistance level is kind of dumb. I mean, you're just being greedy at that point if you're trying to hold on to your whole position past the range high. If after the range high, if you hold on to some of that position, don't close all of it, you can target a high time frame level or any next supply zone above price. And there's two different options for continuation and reversal, or there's two different ways to go about it. So when you're trading this setup for a continuation pattern, right? So that's the breakout and impulse move to the upside. Price is usually getting near resistance, right? Because if it's breaking out to the upside, going higher, you're getting closer and closer to these resistance levels or supply zones or whatever. So you want to take off the majority of your position. I like to take off 80. You take off 75, do whatever you want, but take off the majority of your position at the range high if you're trading this for continuation, because like I said, you're getting closer and closer to these resistance levels. Say, for example, this dark line up here at the top is resistance, right? You get an impulse move because you're trading this for continuation. You get an impulse move, sets the range, sweeps the range low, and if it's going, say the range high is right here or whatever, you're getting closer and closer to this resistance level. Versus whenever you're trading this setup as a reversal pattern, price is typically at support or demand zone and has room to run higher most of the time, right? So if it looks like it has room to go higher, then you want to take off less, right? So what I have wrote down is price typically at support, demand, and has more room to run, so you can take off less at the range high if there are signs that it could keep going higher. So reversal, right? We have the breakdown or the impulse move to the downside. Price tapping into the high time frame demand or key support gives a higher probability, right? So like I said down here, it's typically at support or demand. So say this bottom line is support or demand, you're trading this as a reversal. You get that breakdown, ignore the first low, range high, range low, mid-range, it sweeps the low, right? It's down here at the support. Here's resistance right up here. So you see you have a lot more room to run. You have a lot more, just a lot more profit that you could squeeze out of this trade if you're trading it as a reversal. Because if you're trading it and entering here at support, the range high is probably right here. You still have this whole room. Have the whole room up here. So that's two different ways you can go about taking profit. I think that's the last slide. I will link these slides. I don't know if I already said this. I'll link these slides with the video link, so you guys can go back and look at these and have them whenever you want, because I know this video is pretty long. I already know it's probably pretty long, and I do apologize, but I just want to make sure I'm getting everything in on these videos. And I'm just kind of rambling on also. So I know you guys will want these slides, and it'll just be quicker and easier for you to look back. So we'll go ahead and jump into some chart examples, and then we might run through a regular chart and then just kind of mark some up on the go. So taking a look at this example, I did have this in the journal already in the little write-up. If you missed that, to go look in the setups channel under my bit dealer strategies, and you'll see the whole little write-up. And I had this example. So this is a continuation. I'm trading this as a continuation pattern. You get that impulse move to the upside, and then here are these steps. You get the range high, get the range low, interact with the mid-range as step 3, sweep the range low, step 4, rally to range high is step 5. So on this example, there is a demand zone, a key demand zone right below the range low. So that's why my entry is here. Usually I'd wait for the SFP. This little V reversal is probably the SFP, and usually enter there, but this has a key demand zone, so enter here, stop below that, and take it higher. For a continuation pattern, I would close the majority here at the range high, because that's one of the rules, like I mentioned. So that's pretty much it. You probably, like I said, already seen that. So this is a chart I marked up on Ethereum earlier. It's a classic example, a textbook example of both of these reversal and continuation range low sweep patterns. So here we have high time frame demand. I think this is a daily demand zone, this blue zone down here. And what we have is price. By the way, this is on the H1. So we have a breakdown, right? Supply zone, sent price lower. So we have a breakdown, impulse move to the downside. You ignore the first low because it was a breakdown. Hopefully you remember that, because I try to stress it and mention it 1,000 times so it can get stuck in your head. So ignore that first low. Wait for that range high to be set. Then we have a range low. You can see this is range high. It's this highest wick before price reversed. Lowest wick before price reversed is the range low. You see it interacted with the mid-range, temporarily broke above mid-range, and then failed, swept the range low into demand, and then went higher. So you probably could have broken this down to the M5, but this is just on the H1. And then here you see we have this breakout. So impulse move to the upside. And this is a continuation pattern now, because impulse move to the upside, you use this high because you don't have to ignore anything. You never ignore the highs. You always just ignore that first low on the breakdown. You use this first high as the range high. Use this first low as the range low. And in this case, it did sweep the range high first. So you could have shorted this down to the range low, but I just use it, like I said, as a sign or a hint that the range low sweep is coming. And you see it swept the range low and went higher. So if you did what I said, you're trading this as a reversal, you take less off. So you could say you took 50% off at the range high, because it's a reversal, you're at demand, it has more room to run and more profit that you could squeeze out of it. So you could have targeted this supply zone. I didn't have it marked on this chart, but you can see it right here. It's just this area of consolidation before this down move. You can see price reacting to it. So you could have sold half here and half here, and you can see here I would have taken majority off because it's a continuation. We're getting closer to this resistance, right? You have resistance levels here, you have supply here. So you want to take majority off at the range high, and then depending on where the exact levels are, you can close the rest up here. But that was just a textbook example of both the reversal range low sweep and the continuation range low sweep. So moving on to the next one, we have another reversal pattern, another reversal range low sweep. We have the breakdown, and we ignore this first low that it made, right? Price broke down from this supply zone, broke down, set a low. We ignore the first low because it's a breakdown. Use this temporary high, this small high, but as the range high, and this low is the range low. Price reverses, interacts with the mid-range. You can see it kind of chopped around for a minute, and then once it broke below it. So I also want to mention this because I just mentioned a Stingray this earlier. I see this happen a lot. So you have a level, right? a clear level, but price will kind of just chop around it. Like you'll see, it doesn't really use it as resistance, not as support, kind of just breaks through it, you know, not really using it. And then on the final test before it's going to dump or break out, in this case it dumped, you'll see it'll chop around, not really interact with it. And then the last one, it will retest it and start interacting with it, but not be able to close above it, you know, just fail and close right below it, and then it dumps. So that's something to look out for, not even just on this range low sweep or in ranges, but in general. Hopefully that made sense. It's kind of just a short example, but it's just something I want to mention because I see it pretty often. But anyways, back to the range low sweep. It sweeps the range low and then takes off, and you can see as a reversal pattern, you don't want to take off all of your you don't want to close all of your position at the range high, because it's a reversal pattern. You're at demand or a support level and you have a lot more room to run. So if you took off 50% here, you could target this supply zone, the next supply zone, fill in this little inefficiency gap, and you'll squeeze a lot more profit out of this setup. So here's another reversal. I just noticed I don't have too many continuation patterns on here. One sec, I'm gonna get a drink. So I might have to get a few more continuation examples, but here's a continuation, and then these few reversals. So we have a breakdown. The supply zone sends price lower, and it's a breakdown. Impulse move to the downside, sets as a low, temporary high, right? Sets a low and then a temporary high. You ignore the first low because of a breakdown, because it was a breakdown. And then you get the high, set the range high, comes set the range low, starts interacting with the mid-range, you can see, and then comes sweeps the low at high time frame demand, and then goes for the range high. So you can see this W pattern. That's also a pattern that you want to look out for. M's and W's. But you can see as a reversal pattern, you don't want to take off all of your profit at the range high. You take some off here and wait for price to go higher. You can target the next supply zone in this example. So you could see it eventually came back up here, so you could have got more profit out of that trade. So yeah, let's go ahead and go back over these slides just for a second, make sure I didn't miss anything. So like I said, make sure you have the range high set first, then the range low. Always range high, then range low. You might get a few examples of whenever the low is first and then the range high, and then you can that would have worked out. But for me, I like to set these rules and stick to them. So strict on 1 through 3. You might get the range high sweep before the range low sweep, but I still only look to enter at the range low sweep, targeting the range high. So I think that's pretty much it. I think I covered all of the main points of this and went over the examples. So yeah, I hope you guys enjoyed this video. Let me know if there's any way I can improve, make them shorter or longer, more detail in the slides, less detail in the slides, anything at all for feedback. I would appreciate it, because I'm new to all of this and I just want to do it the most efficient way and the way that you guys like it the best. So anyways, yeah, let me know about that. Hope you guys enjoyed this video, and yeah, I'll talk to you guys later.